As you can see, we have another failed Bitcoin breakout attempt developing right before our eyes. Hey guys, it's Keith Allen. And when I woke up this morning, I was looking at the daily chart and I saw this, that breakout attempt happening, but I didn't like the fact that it was happening on declining volume and declining momentum here, as seen on the trend precognition A1 slope line down here, right? So what does that have us focusing on at this point, right? We obviously have strong resistance overhead, and we can see this resistance in a couple of places, right? First of all, we have confluence in the chart here around the 71,300 level, right? And let me just draw a quick trend line here to illustrate that. 71.3-ish, right about here. Okay, and you can see, right? We have kind of an RS flip zone right around here, give or take. Wicks, resistance, we wick through it, and now it's resistance again, right? So having a hard time breaking that level. Really having a hard time establishing and validating an RS flip at really any of these key levels, right? The 69K level has just been really, really hard to break. All the way up, we had wicks through it. We broke out briefly, but each time we had more wicks below that illustrated the weakness, had a full breakdown. Now, the good news about these breakdowns is we're creating higher lows. So that is, in my opinion, bullish. But what's bearish is we're not getting the higher high, right? So we have a new all-time high up here around 73,800, and we're just building from the bottom here, right? So as you can see, the key moving averages have been drawn up. Yesterday, the 50-day had perfect confluence here with the lower trend line. And today we see the 21-day moving average has perfect confluence with that 69K level, the prior, the 2021 top, which was our prior all-time high for years. So where can we go from here? To the upside, we obviously know we have this resistance up here, and we can see that on fire charts as well. And I'll show you that in a second. But before I do that, I want to just look at these other areas here so we can maybe identify where the confluence is between the technical levels and the liquidity levels, because the technicals get overshot sometimes they get exploited with manipulation, whatever the case may be. What doesn't lie is where the liquidity is, right? So the series of higher lows is a very positive thing in my opinion. And, we went from 59K up to the 61K level. And now, as of, a week and a half ago or so, we were at, at the beginning of the month, we had the big dump on the monthly close, and that kind of pushed things up to, the 64, 65K level, which is positive. And now, if we should break through this level here, then, we look to see where the next support is. Obviously, we have technical support down here at the 66K level at this point, and this is moving upward, right? So you can almost even, what if we were to just draw a mini little micro trend line right here and see that if this breakdown continues, where we go. Let's say we don't go all the way down to the trend line here. If we see price fall through the 69K level again, maybe 68 and change looks good, right? So let's go see what that looks like in terms of liquidity in the order book. I'm going to take it in. Let's see what the monthly looks like. And you can see here, liquidity moving around now, right? As we especially when we get these more drastic moves. And something to also be aware of is who's buying and who's selling at any given moment, right? And whales have been buying since we kind of bottomed out. And, this is back in the beginning of the beginning of the month, right? This was the dip. Whales bought the dip, and after peaking here, have started to roll off the top just a bit, right? Meanwhile, look who's buying down here. There's times where we see yellow in kind of a smooth trajectory, which looks to me akin of TWAP strategy. But when you see a lot more drama in the, or contour in the line, then that tells me that, maybe we see retail chiming in a lot more, right? You see these smooth transitions right here. This is just solid distribution. And while, sure, retail lives in this smaller class, these are only $100 to $1,000 orders. When you see a large volume being distributed or accumulated on such a level trajectory, it's usually indicative of a TWAP strategy, a time-weighted average price strategy, dominating that order class. Now, at the moment here, we see things changing up a little bit. We see a little more texture in the in that slope in that line, and to me, that is a clue that perhaps they're not TWAPing at this point, and there's more retail influence here. Now, what you need to be careful of as a trader is, are you trading with whales or trading against whales? And right now, it looks like the purple whales and the brown whales sold up here and sold here. And so purple whales are selling, yellow is buying, green was buying. So those would be the smaller classes where retail lives, and the larger classes are largely selling. So I think you know how that game ends, right? I choose to swim with whales for whatever that's worth. So you can see now we have some liquidity cleared out in this area, which means that creates some room for some volatility that we need to be alert to. In terms of where the bigger concentrations are, we said 66 and change, right? Here's 66K. We actually have bids laddered all the way down, 65, 66, and higher, right, into the 67K range. So this kind of covers that area of the chart that we were just talking about, right? So if we were to go all the way down here, this, we do have some good bid support down here that could potentially hold price if we see a wick come down to this level. In terms of what's up here in the 69K range, well, let's see. Not a lot, right? We have a little bit here. That's just a very small, $5 million. That's not going to hold anything. So the fact that this isn't stacked here tells me that it's going to be difficult to validate an RS flip here at 69K still. And we need to see more strength come into this above this 66K level for that to happen. So the upside liquidity is obviously denser. We can see that by the brighter colors in the chart here. And this is a key inflection point, right? Look, we just had some of the ask liquidity from 75 has dropped in here. Actually, some from here and up here has stacked into this place here. So you now have another 52 million that just moved into that 73K range, right? So we know that it is going to be very difficult to break these levels until we see more liquidity down here. We need to see the bright spot. The brighter spots tend to win these battles, okay? So we need to see more bid liquidity coming into this range, close to price, to have a chance to, a better chance, I should say, to set a new all-time high above 73.8. 75 is very, very strong, and now 73K just got fortified with an extra $52 million in resistance. So that's going to be a tough battle. Let's take a quick look over to the ETF side for a moment. And, I've been noticing something here. Yesterday, positive inflows. They're buying the dips, right? BlackRock has just been relentless, right, with the buying. Meanwhile, the bleeding continues here over on Grayscale. And what I'm starting to ask myself now is, of this 192 million, how much of this is new money, and how much of this is potentially coming over from Grayscale, just trying to get away from these 1.5% trading fees? Because, if somebody's coming into this new, chances are they're looking for one of these opportunities with great promotional offers, 0% on fees for the time being, out of Fidelity and out of Bitwise, and several of the other entities. Now, I would understand that people want to stick with the larger legacy institutions, and I think that Fidelity is right up there as well, right? But obviously, they're getting outclassed by BlackRock at the moment with 0.12% fees on these accounts. So, that's a far cry from a 1.5%. So this is still very attractive. This would be very attractive to anybody that was forced to pay this, right? So is some of this coming over here? No doubt some of it, if not a lot of it, if not all of it, is certainly a lot of it is going to be profit taking, because some of these people have been in for many, many years, right? But this just seems to me like I have to wonder if some of these are just porting over into BlackRock. It'd be interesting if we could get a metric on that from somebody. If anybody knows a source for that information, that would be great to find. And they can't just transfer this in. They would have to sell it and then buy back in over here if that's how they're playing the game. Back on over to fire charts. Of course, I'm watching the liquidity, and that's all we can do. We can see that there's less sentiment down here on the lower ranges below the 60K level. Really, what was concentrated here around this 60K level, 59 to 62, we're now seeing more above even 65 at this point, right? 65 to 67, and this range right here really is the sweet spot. 67 to 68K is where the most bid liquidity is stacked. But in the past few minutes, we've just seen a block from up here into 68. Really just below 69K, drop all the way down here. So this creates, in my opinion, opportunities, and that is what I am looking for. I'm also looking to see when whales are buying and when they're selling, right? I think in the long haul, the bullish narrative, the halving is now on the 20th. I had the 19th in here for a long time, and I just checked it this morning, and I see that the new forecast is for Saturday the 20th, 420, if you will, which is maybe poetic. I don't know. But obviously, a lot of people, myself included, think that after the halving, we're going to see price appreciate, not in a straight line. We can still have big corrections. That certainly happens in bull runs, and it certainly happens very close to halvings, both before halvings and after halvings. We have history of seeing those things happen. So I'm not deterred by that at all. What I am doing, though, is preserving some capital for those opportunities should they present themselves. So right now, we need to establish a better consolidation range. We're down here, from 59 up to 73, almost 74,000. That's too wide of a range for me to call it a consolidation range. I want to see it happen here, maybe in this 65 to 69K range, or above 69. Maybe it's going to be in the 69 to 72K range. Right? But none of it has been established, right? Because we keep breaking down. So that's what I'm watching for. I'm watching for where the consolidation happens. I'm watching for where and when the bid liquidity comes in and how purple whales respond at any given moment in the charts, right? So hope that gives you some insight into what to be looking for as we head into the weekend. Liquidity will dampen volatility, so stands to reason that if this stays intact, that this might be our trading range for the weekend. Maybe this is just a weekend guardrail. I don't know. We'll see how things develop. Obviously, whales like to play games over the weekend, so we're always in tune to that. But this is an opportunity, right? Maybe we're just gonna range here for the weekend. Maybe we see a rug pull, and if that happens, that changes the dynamic of things. So, that's why I always stay in tune to fire charts so I can see what the liquidity is doing, because I get a lot of clues from that for sure. Hope this helps you. Hope the insight helps you figure out how you're going to navigate things as price action develops and things move forward here through the month of April. As always, nothing I say or share on these streams should be considered trading advice of any way, shape, or form. Do your own research, manage your risk, and stay in the game for a long, long time, right? That's going to do it for this one, guys. Hope everybody has a fantastic weekend, and as always, trade safe, my friends.